Hello guys, how are you all? This is Pragya and we are here to prepare for the upcoming exam, that is Union Bank of India's local bank officer. Friends, this is going to be a 30-minute session, and in this session we will be covering the banking and financial awareness portion, that also in the form of MCQs, that is multiple choice questions, right? So now let us not waste much time of ours and come up with the further portion in which we will be covering these all banking and financial awareness portions, right? So today we are going to cover the September month. Everything, every current affair, every new decision, every change which took into account in the September month, right? So yes, very first question of the day is asking, what is the Nomura's revised GDP growth forecast for India for financial year 25? The question is simple, straight, yet important. And what is it asking us? It is asking us out if we go through Nomura's revised GDP growth. Okay, then how much is it for the financial year 25 for India? So we are currently having five options. Is it option A, that is 6.9%, option B 7.2%, C 6.7%, option D 5.9%, or option E, that is 7.0%. See, whenever we are being asked about the GDP growth or the revised GDP growth forecast, then we are certainly having some different names, right? So what is Nomura? What is this? So this Nomura is a global financial services group. What is it? It is simply a global financial services group. Okay. And what does it do, friends? It basically provides different services to the individuals, institutions, corporations, and different governments as well. Like if you talk about the central government, or if you talk particularly about the state government. And it was founded in the year of 1925 in Osaka, Japan. Okay, and it's currently serving a network of 30 countries. So yes, if we go through this global financial services hubs or groups revised GDP growth forecast, then how much is it? So what should be the correct answer this time? Anyone? Okay. So this time, dear, the correct answer, it is option C. That is 6.7%. So this Nomura has revised India's GDP growth forecast to 6.7% for the financial year 25. See, although it is down from the previous estimate, and because the previous estimate was at 6.9%, which is the option 1 here. And what was the reason behind this downfall? So it was due to political instability and stalled reforms. Okay. So now coming up with next question. Let us see what is it asking. So second question of the day is asking, which of the following is not listed by Nomura as a downside risk to India's economic growth? So what is it? Hello, Sai Kumar. What should be the correct answer this time? For previous answer, few have replied, but this time it is asking again. Here is the name of Nomura. So it is asking what is the main listed or which is not the main listed Nomura as a downside risk to India's economic growth. So is it political instability, stalled reforms, weaker global growth, rising oil prices, or option E, that is sluggish capex? What is it? What is the basic reason which is not being listed by Nomura? So Vikas Teli saying option D, Learn Shortly saying D. Okay. So this time here, the correct option would be, of course, option D. Because it is rising oil prices. See, Nomura has listed different reasons behind this downside risk to the India's economic growth. Like political instability was there, stalled reforms, weaker global growth, sluggish capex, etc., which were being regarded as the downside risk for our India's economic growth. But oil prices was not being noted there, was not being mentioned there, and oil prices are noted as a two-sided risk, which basically means that they can either pose a risk or benefit the economy. So it is something which is unstable and there is uncertainty. So that is the reason it was not being added by Nomura. And here we also have to go with option D, which is not being listed. Again, I'm repeating it out. It is not asking the thing which is being listed. It is asking the thing which was not being listed by Nomura. Clear? Now, coming on the next question, which is asking, what is the percentage of haircuts taken by debtors under the IBC in the first quarter of financial year 25? So this time, they are simply asking you the percentage of the haircuts which were being taken by debtors. Under what? Under IBC. Now, what is IBC? Although we all know it, but yes, it is Insolvency and Bankruptcy Code of 2016. So they are talking about when you go under IBC, that is the Insolvency and Bankruptcy Code of 2016, then what is the exact accurate percentage of haircuts which were taken by the debtors? Okay, so for the very first time, this IBC was originally published in 28 May 2016. And under what citation it comes? It comes under the article number 31 of the year 2016 IBC. Should be the correct option, correct percentage this time. So is it 57%, 62%, 68%, option D, that is 72%, or option E, 65%? So Yuvraj is saying it is option D, that is the correct one for this question. Okay. Anyone else? See, no one else is having any idea. How can it be possible? Take your time. We are not running somewhere or we are not in a hurry. Question is simple, straight, simply asking you the percentage of haircuts which were being taken by debtors under what? Under the Insolvency and Bankruptcy Code of 2016. And they are revolving around the very first quarter of the financial year 25. So Lakshmi Narayana is saying option C is correct. Okay. So this time here, the correct option, of course, it is option C. That is 68%. See, if we talk about the very first quarter of financial year 25, then the haircut under IBC has increased to 68% of the admitted claims, which was previously, if you talk about financial year 20, then it was how much? It was 57%. 57% is being given here so as to confuse you guys, because previously the time it was being compared, so it was 57%, but now it has come up to 68%. So this time the correct option is option C. Now, coming up with next question, what it is asking, what is the key framework supporting HDFC Bank's new DigiPassbook feature on the Smart Wealth app? Now, see, they are asking you the key framework. Okay, what does it do? It supports HDFC Bank's very new DigiPassbook feature. And this feature is being provided to us on what app? What is the name of that app? So it is Smart Wealth app. See, this key framework which is supporting, is it option A, that is UPI, option B, payment aggregator framework, option C, account aggregator framework, digital banking framework, or option E, financial aggregator framework? So which option is the correct one? They are simply asking you the main, the key, the solo framework which is supporting HDFC Bank's DigiPassbook feature. On which app? On the Smart Wealth app. So this time, Kiran is saying option C is the correct. Okay. What about others? What should it be? What should it be? Anyone? Lakshmi Narayana, Yuvraj, Vikas. What should it be, dear? Is it going to be option A, B, C, D, or C? Anyone? Okay, Krishnendu is saying it is option C. So this time, the correct option is, of course, the widely chosen one, that is option C, which is saying account aggregator framework. See friends, this DigiPassbook, what has it done basically? It has leveraged the account aggregator framework. And after receiving this account aggregator framework, it is now getting allowed the users to consolidate financial data from multiple institutions securely. Now, what is going to happen after this whole new thing? It will definitely enhance the user's investment and financial overview. So indirectly or directly, you might be calling it out, but yeah, it is going to support and benefit HDFC's whole framework for the customer and the people who are being connected to HDFC. Clear? Now, next question is asking, what future additions are planned for HDFC Bank's DigiPassbook feature on the Smart Wealth app? They are simply asking you out that yes, we are knowing what is there in this Smart Wealth app's DigiPassbook as per now. But what is something which is going to be added? So is it integration of credit card balances, addition of mutual fund investments? Option C, that is consolidation of insurance and bond investments. Option D, integration of international investments. Or option E, addition of personal loan details. So what should it be? Anyone is having any idea? Okay, take your time. Have 5 seconds. I wouldn't now interrupt you all. Okay, great to see few have already replied and everyone is coming up with different option. Okay, it is quite surprising, but yeah, few people are with A, few are with B, C, D, E. Okay, no issues. So this time, dear, the correct option is going to be option C. That is consolidation of insurance and bond investment. So yes, of course, HDFC Bank is currently planning to expand the DigiPassbook. What will it do? It will include insurance and bond investments. Further, it will enhance the app's ability to provide a complete financial picture to its customers, basically to its users. So of course, yes, very good. You guys are correct. At this time, the correct option is option third. That is option C. Now, okay, let us check what is the next question of ours. It is asking, what was the share of private sector banks in total credit as of June 2024? According to what? According to RBI's BSR data. This time, this question is important and it is asking you out the share, the percentage or the percent share of private sector banks, PVBs, in the total credit. If you talk about the recent info till June month of 2024, according to what particular purpose? According to RBI's BSR data. Now, what is BSR, friends? It is the basic statistical return code data. Basic statistical return code data, right? So this in short we call as RBI's BSR data. See friends, it is a unique 7-digit code assigned to the banks in India by RBI. What is it? It is unique 7-digit code assigned to banks in India, and this is being assigned by RBI. So now it is asking you out how much percent share of private sector banks in total credit is there as of June 2024 according to RBI's BSR data. So now, is it option A that is the correct one? That is 36.5%. Option B, 46.9%. Option C, 53.1%. Option D, that is saying 62.0%, or option E, 26.4%. So Yuvraj is with 46.9. Okay. Kiran, Shruti, Sumekha. Anyone else? Have 5 seconds. Like I always say, in between these 5 seconds, I would not be interrupting. Take your time. See what will happen, guys. You don't know me. I don't know you. Okay, in person. We are screen aparts. right? So if you are going to reply it out, it is just going to boost your confidence and provide you courage. That's simple. The time you would be appearing for any sort of interview, then also you would definitely be needing to reply things now. So think in that manner, at least try to reply it out. We are not getting anything. It will definitely be increasing my work because I will have to go through each and every, comment or each and every reply you guys have made. But yeah, it will help you out indirectly because the introvert nature or something, whatever you are going to call it out, it will get decreased or lowered. So do try to reply, at least try to reply it out. Whosoever who is not replying. Others are doing great, no issues. Okay, Sunny Singh. अरे कुछ तो है उसका आंसर. Of course, Sunny, कुछ तो है इसका आंसर. You are right. So now, Kiran, Sumekha, Lakshmarayana, Malek Das. Very good, guys. This time, my lovely ones, the correct answer is going to be option B. That is 46.9%. Yes, option B is the correct one. So, by this, what we came to know that the share of private sector banks in total credit rose to 46.9% in June 2024. As per RBI's data, what does it showcases? It showcases or it shows a steady increase over the past years. Clear? So now, coming up with next question, which is asking, previously they were asking about the share percent. Now they are again asking you about this whole share thing. But yeah, here the criteria has been changed because they are talking about what was the share of scheduled commercial banks in deposits with interest rates of 7% and above in June 2024. So now the question, the scenario has completely been changed. They are again asking you out the share percent, but no. Here they are asking you the share of SCBs. In what? In the deposits with interest rates of 7% and above in June 2024. So is it 36.5%, 46.9%, 53.1%? Option D, that is 66.9%, or option E, 26.4%. So which option is the correct one? Anyone? Sunny is saying option C. Okay, what about others? What about my other sleepy chicks? What should it be? Lakshmarayana, Kiran, Shruti. Okay, Kiran is saying 53.1. So guys, this time the correct answer would be option D. That is 66.9%. See, the share of deposits which are like bearing an interest rate of 7% and above in the scheduled commercial banks, it has rose to how much percent? Presently, it is at 66.9% in the June 2024 month. What does it indicate? It indicates a shift towards higher return. Clear? This much? Now, coming up with next question. What is it asking? Which regulatory body granted final authorization to Pay Local to operate as an online payment aggregator? See, this is the vice versa kind of questions. Previously, we were clearing out the questions in which they were asking, name the company or name the organization or institute of whosoever who has received this authorization, that authorization to finally operate as an online payment aggregator. And we also did discuss what do we mean by an online payment aggregator. But now they have changed the thing. They are asking you out, name the regulatory body that has granted this final authorization to Pay Local to now operate as an online payment aggregator. So that is the reason you have to remember each and every damn thing, dear. So this time you are having 5 options. Is it option A, that is SEBI, option B, RBI, option C, NPCI, option D, TRAI, or option E, IRDAI? So which regulatory body is the correct one? Anyone is having any idea? What should it be? Good evening, Venkatesh. Okay. Sunny is saying B. Yuvraj is also with option B. Sumikha is with option B. So this time, my friends, the correct option is of course option B. That is RBI, Reserve Bank of India. So yes, from here we came to know two things basically. First is the name of the regulatory body, that is RBI, that has granted this final authorization. Who has received this authorization? The name of that company is PayGlocal. And what sort of authorization it is? They are now going to act as an online payment aggregator. So yes, we came to know three things from a single-handed question. Clear? So yes, PayGlocal has received final authorization from RBI. Why? So as to operate as an online payment aggregator. See what will be enabling after this authorization. So they are being enabled to offer secure and compliant payment solutions. Now, next question is asking you out, what is the primary focus of PayGlocal's business model after receiving RBI's approval? Previously, they were asking you the organization's name. Now they are asking you the primary focus, aim, objective of PayGlocal's business model after they have received this RBI's approval. So is it mobile wallet development, cross-border payment solutions, microfinance leading, cryptocurrency transactions, or option E, that is ATM operations? They are simply asking you, let me break down this question. They are simply asking you the factor, the criteria, the work which PayGlocal is going to focus upon after receiving this RBI's approval. Okay. This is simply like, what are you going to do after completing this class? They are simply asking you, what is PayGlocal going to do after receiving this RBI's approval? So what are they supposed to do? What will they be focusing upon? Anyone? Anyone is having any idea? Take your time. I have 5 seconds. I will not be interrupting in between. Okay. They are asking you the primary focus. See, do you know what is PayGlocal? One of your friend is asking, what is PayGlocal? What is PayGlocal? Anyone? Take your time. You must be knowing at least, dear, what are you talking about? What are you studying currently? What is PayGlocal? See, what is PayGlocal, friends? It is a cross-border payments platform. What is it? PayGlocal is a cross-border payments platform, and basically it helps different businesses process to, undergo the international payments securely. What is basic use of PayGlocal? It definitely be reducing the fraud reduction is there, dynamic currency conversion is there, recurring payments, customized flaws, dedicated support, etc. So these are basically the things which PayGlocal provides. So definitely PayGlocal's work revolves around this cross-border payment. Okay. So now is it clear to you? Who was asking? Venkatesh? Is it clear what is PayGlocal? Okay, a number of friends of mine have replied. Great to see. This time, my lovely ones, the correct option is option B. That is cross-border payment solutions. As I told you now, yes, very good, Yuvraj. So, PayGlocal basically focuses on providing cross-border payment solutions. How does it do it basically? It uses advanced technology for seamless, secure transaction processing and risk management for the merchants and banks. That's it. What do we mean by PayGlocal, and what is going to be the basic criteria on which PayGlocal is going to work after receiving this RBI's approval? Next question is asking, what type of payments does PaySharp focus on as a payment aggregator? So, do it focus on credit card payments, non-card based payments, cash payments, cryptocurrency payments, or cross-border payments? So they are asking you about the sort of payments on which PaySharp basically focuses. as an payment aggregator. First of all, do you know what is pay sharp? What is this pay sharp? See, friends, it is a digital payment service that allows users to make and receive instant payments, like to and from any other banks through the FNB app. So yes, that is what we mean by. And one more thing is there. It is not pay sharp. It is, sorry, it is pay sharp. Remove this R. It is being mistaken. It is pay sharp, which focus on as a payment aggregator. So yes, you have replied great. Venkatesh is saying cash payment. So this time, dear, the correct answer is option B, that is non-payment such as UPI and virtual account based solutions for the NEFT, IMPS, RTGS collections, etc. Clear? Now, coming up with next question of ours, which is asking you out, if we talk about or go through BCG's report, then what is the early delinquency rate for fintech lenders in loans 90% days past due? So now the question is seeming tricky. The question is seeming, tough, but yeah, it is important at the same time. They are asking the BCG report, then what is the early delinquency rate for the fintech lenders in loans which are like 90 plus days past due within next months of disbursement? So here is a term that is early delinquency or delinquency rate. So delinquency rate, what is it, friends? It is basically the percentage of loans that are past due. What is delinquency rate? It is the percentage of loans that are past due, usually more than 30 days. Usually it is, it is usually more than 30 days. And what is, see, if someone is going to ask you out, what is the main role of delinquency rate? So it is a key indicator of the financial health of borrowers. What does it do? It is a key indicator financial health of the borrowers. And of course, it also showcases the riskiness of a lender's loan portfolio. So that is what do we mean by delinquency rate, and they are asking you about this rate only. So is it option A? That is the correct one. That is 4.2%, 5.9%, 2.1%, 1.3%, or option E, 0.6%. Sunny is saying, Raj is saying 5.9. Kiran is saying option C. Okay. Anyone else? Take your time. Have further 2 to 3 seconds. I would not be interrupting you. Have your time. Go through the question. Okay. Good to see. This time, the correct option is option B. That is 5.9%. Which means fintech lenders show the highest early delinquency rate of 5.9% in loans that are 90 plus DPDs within 6 months of disbursement, as noted in the BCG report. Yeah, because we were here talking about the BCG report. And it also showcases the risk management for the merchants and banks, both at the same time. Now, one of our friends is asking us out, what is the difference between cash and non-cash payments? See, friends, the main difference between the cash and non-cash payment is that cash transactions involve the exchange of physical cash. Cash transactions, what is there? Exchange of physical cash is there, right? While non-cash transactions, there is no exchange of physical cash. This is the foremost and basic difference between cash and non-cash payments. Otherwise, Cash payment systems use paper-based money. You can call it in such manner also. The cash payment systems use paper-based money and coins as a mean of payment. Meanwhile, when we go for non-cash payments or the non-cash systems, basically, so there are payment instruments which are like no longer use any money. There's no longer use of any money in the physical form. I think this much info is sufficient, and that's all for today's session. Apart from it, if anyone is having any query, any question, any doubt regarding any question, so you can ask us out. The comment section is 24 there. And of course, we are 24 there for you guys. So till then, take care of your mental and physical health. And signing off, Pragya this side. Thank you, everyone. Bye-bye.